So is Europe becoming a bankruptcy machine? Well, Bloomberg columnist Matthew Lynn says so. He joins me now. I think he might think that, but I'd say Angela Merkel has kind of different ideas as to what's best for Ireland and who should be deciding that. Quite interesting, as ever, to hear what you've got to say. If I suppose if the bailout goes ahead and everything's smoothed down again, they haven't counted on Matthew Lynn, who says that it's a bankruptcy machine in Europe and it's just going to happen again and again, right?
Yeah, I think so. I mean, I think this one is much more serious for the euro than Greece, I think, because you can step back and look at Greece and you can say, well, it was bonkers, it was madness to ever allow Greece into the euro area. And I think many people in Frankfurt and Brussels would probably agree with that now, because they fiddled all the numbers, all the kind of stuff we know about. They haven't reformed their economy. They ran up huge fiscal deficits. But you can't say any of that about the Irish. I mean, the Irish economy was in terrific shape before it went into the euro.
Yes.
It was a very open, free market, free trading economy. The government wasn't profligate in any significant way, and they did everything possible that they could when the crisis hit. They've had very deep austerity measures, but they're still being thrown into what looks like bankruptcy. So you can't really say it's their fault. You have to say it's the euro's fault.
And that's significant, because it shows that it's the euro that doesn't work rather than one.
Absolutely, and if it's the euro doesn't work, then it's not going to just not work in Greece, and it's not going to just not work in Ireland. It's going to not work everywhere. So as soon as the Irish problem is fixed, you're going to hear lots of stuff when they probably do accept a bailout as some people with a big stick will come along and hit them over the head very hard if they don't. So they probably will. But when they do, the markets will just move on to Portugal. Once they finish with Portugal, then probably Spain, and after that, I think France. I mean, no one's really talking about France very much, although the bond prices are spiking up in quite an interesting way. France,
higher than Chile.
Yeah, absolutely. I mean, it's an extraordinary thing when you said, if you said 5 years ago that France would have to pay more to borrow money than Chile, people would have said you were crazy. So I think you have to recognise there's something seriously wrong with the way the monetary system is working. And until you fix that, you haven't fixed anything.
Right back when the euro was founded, there was this idea that if you didn't have fiscal policy, you couldn't have monetary policy. And in fact, if there wasn't central fiscal policy, they never got to that stage. Without it, is that the fatal flaw that runs through the Eurozone? Yeah,
no, I don't think it is the fatal flaw. I mean, because they're talking a lot about fiscal policy and having a single fiscal policy. But unfortunately, no, it's probably not the fiscal flaw. So, I mean, they will try and fix that, but even that's not going to fix it, because, that was the problem in Greece. It's part of the problem in Spain and in Italy. But it really wasn't the problem in Ireland, because, the Irish didn't run up big budget deficits. What happened was that the property speculators ran up big budget deficits. The core problem is that you always have the interest rate that is wrong for individual countries. You had very low interest rates in Ireland, so of course people went out and borrowed lots of money. What else do you expect them to do?
And these are individual countries. They're not part of a homogenous mass like the United States. Even though they're individual states, they are all part of America, whereas actually it's very difficult for people in Ireland to understand why Germany, they see the ZEW figures coming in, Germany doing better and better, while Ireland doesn't seem to be able to do very well, and austerity measures are going to bite them and hit them really hard.
Yeah, absolutely, and even Germany doing well is part of the problem, because the German trade,
exactly.
I mean, another way that the imbalances come out is in that massive German trade surplus. So, I mean, Germany is also having problems as a result of this. And I think that, until the real lesson you've got to draw from this is that the monetary union just isn't working the way it's currently set up. You probably almost certainly have to split it up into 2 or 3 different monetary unions. And until you start grappling with that problem, all the rest of it's just kind of flim-flam. It's just putting sticking plaster on the issue, and it's going to move on somewhere else.
OK, we shall wait and see. Matthew, thank you very much indeed for joining us today.